Gold traded with extreme bearish bias yesterday. As we discussed in our update that below 1819.8 it is going to turn bearish. First resistance will be at 1890, then at 1884, and below that 1870 levels. It has gone close to 1870 levels. However, it's still feeling shy of it. So now what to expect today, from which position we should take in order to profit, we will see with the help of charts and indicators. Let's start. First, let's have a look at the hourly chart. See major divergence on the 20, 50, 100 period moving average on the hourly charts. It is still trading in the bearish channel. You can just connect the highs here. You can observe now 1984.85, which was the support levels, is now going to be the resistance here. At the same time, we all know that there is a gap which needed to be filled at around 1970 levels here. But if you look at the divergence from the moving average, this is too much, and hence the possibility for it to rise towards 84.85 is there. Now if you look at the movement here, see the drop, retracement, resistance there on the upside at 78, then the drop. Right now it is falling shy of breaking past the previous lows, and hence once you see it breaking below the previous lows of yesterday around 1872, you can say that further bearishness may prevail here in gold. However, we have to stay cautious because see, this is third straight red candle what we had seen yesterday and on the daily charts, and possibility for it to retrace exist. Now if you look at the stochastic, this is hitting the bottom here on the daily charts, while look at on the hourly charts, while look at MACD. See MACD traded with a fat belly. See first convergence, second convergence, third, this is a crossover here, and look at this crossover, this is minor retracement. Now it is trying to trade with a, also look at the heights here increase. Now this crossover may bring little bullishness because see this is coming from extremely lower levels at -8, and hence a little greener candle on the upside cannot be denied here. RSI also traded with extremely oversold levels here. Coming to 2 hour, likewise on the 2 hour charts, see major fall here. Look at the slope here, it is vertically down on the moving averages here, but at the same time the prices are divergent, yes. However, it is still getting resistance on the upside, and I think it is willing to fill the gap first at 1870, and that is a very important level here. 1870, 1865, very very strong support exists at around these levels, because that is a long term gap which is needed to be filled, and that is what gold is aspiring to. Also on the weekly charts, I will show you why this is a great support. Now, if you look at the stochastic, this is coming out of the oversold levels here. MACD is still trading with a fat belly here. And this is a long streak of bearishness. Possibly a crossover will bring bullishness, but right now it is still staying bearish. Also, one must note that it has come to -10 level. And on RSI also, it is trading extremely oversold. This calls for a possible pullback or a retracement on the 2 hour charts. Now let's have a look at 3 hour chart. Now if you look at 3 hour chart, see lower highs, higher lows, phase of consolidation, and yes, above 1878 we may see a rise towards 1884-85 levels as the first resistance. At the same time, below 1872 one can expect at least 1870 levels to be hit and achieved. I will show you on the weekly and daily charts why it is important. Stochastic consistently running oversold here, while MACD is still trading with divergence, trading bearish, and it has also achieved -10 levels and below. Now see, even when you see the rise here, it has failed to break past +10 levels, and this time on the downside. Now this is in the May, and before that when gold was bullish, it has achieved the high that +10, +20, but in the recent past for last 6 months, it has possibly fallen shy of breaking past +10 and -10 levels. So this time let's see if it is going to fall further, and right now it is still staying bearish. But also one must note here that the candle size have started to flatten and rather having a diminished body size. This suggests that the bearishness is getting diminished for sure. RSI extremely oversold here, but remember, also one must note a point that whenever things get oversold for a commodity, for an instrument, more sellers switch in. That is also one of the factors which we should always count. Now look at 4 hour. On the 4 hour charts, likewise, consolidation undergoing right now. Also for after minor retracement, first red candle and second candle has just started. I will look forward to 1872 levels to be breached, and then 1870 levels will come into picture, which is a great support here for gold on the downside. Stochastic consistently running oversold. MACD is trading with divergence and bearishness here. It is still looking downwards. RSI has hit extremely oversold levels here. Now see, these are the few incidences where gold has seen oversold levels on the 4-hour charts and a minor retracement, oversold levels and a major retracement here. Likewise, if you look at in the history, you will find oversold levels and a retracement here. So on the 4-hour charts, these extreme oversold levels calls for a little pullback. You can see here as well, it has hit a bottom at around these levels, then a retracement is seen and gold stayed within this zone for long. So likewise, it has come to an extremely oversold levels and hence downside appears to be limited here as of now. Coming to the daily, now looking at daily charts, see, this is what I am trying to say. This is a gap here which was left unattended so far at 1870 levels, which makes it a very good support. 1870, 1865, this is going to be a major support, and then 1860. So these three supports for the near term for gold are going to remain critical. You have to note this point. 1870, 1860 zone is going to remain a critical support for gold, below which possibly there could be a stronger downfall, which I do not expect at least this week, and hence you have to trade with caution today and tomorrow. Now look at the daily charts. The candle is outside the Bollinger Bands. Historically, it certainly is difficult for any instrument commodity to open a candle outside the bands and continue to stay outside the band. But at the same time, one must note that this is expansion of the bands, and hence if the today's candle stays bearish, probably the Bollinger Bands will be definitely stretched by tomorrow. However, right now it is staying outside it, and there will be a very good support which will come into picture for gold on the down. Also, if you look at the stochastic, this is extremely oversold on the daily charts. The MACD, three bearish candles and increasing in body size. It is still bearish. It is not yet willing to converge, and hence we have to be still watchful. RSI has just entered into oversold. Also, let's have a look at the weekly charts. Here on the weekly chart, the candle is outside Bollinger Bands. The gap is here at 1870. The 50 period moving average is sitting at around 1860 levels, and this zone here at 1870 and 60 is a major support for this week, and probably it might not break past this zone at least this week. So for the day, I will recommend you to sell at 1872, but with a caution note that 1870 is definitely a support, and hence it can try to breach a little lower towards 1867, 68, and then bounce back from there. That is one probability I will look forward to. That even if it is bearish, it may just try to, or even if it has to reverse, it may just try to fill the gap at 1870, 67 levels, and hence you can sell at 72, but with extreme caution that the possibility of a reversal will be very high. At the same time, on the upside, one can buy here at 1878 levels, but remember 1880 is the first target and a very strong resistance. Then beyond that, we may see 1888-91 zone, the next stronger resistance here. Beyond 1891 is where the bulls will be active, and we can see further retracement which might take it till towards 1898 levels. So I do not see it probably reversing towards 1900 at least, but yes, a little retracement on the upside is expected, and 1884-88 levels can be seen. However, you have to still stick to the levels here. Do not trade in hurry. Just stick to the levels and always trade with the stop loss at your entry price. On the downside, I see support is going to come into picture, and this is going to be a very good support, and hence for the day you have to trade with caution on the downside. So take your positions accordingly. Trade with a stop loss, trade with a trailing stop loss. Do like, share, subscribe, and comment. If you appreciate the effort, you can like, you can share, subscribe, and comment. It's always a great motivation for me. At the same time, you can be part of my mentorship batch. The 26th batch is going to start on 9th of October. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. You can also join my free Telegram channel in order to get the live market updates. The link is mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.